Yet another South African bank is citing the strain on consumers as a worrying trend. Standard Bank released its financial results for the 6 months ending in June 2023. Now, for more on this, let's talk to the bank's CEO, Tshabalala. Thank you so much for joining us, Sim. Let's first talk about the good news. There was a jump in headline earnings with a particular boost from the African regions franchise.
Hello, Melissa. Always a pleasure to be on your program. Yes, indeed, the African operations were the heroes over here. That business was up 63%, and they now make up over 45% of the Standard Bank Group, and they're now larger than the South African operations. So, as you say, a really stellar performance.
However, credit impairment charges did increase across all portfolios, which means Standard Bank expects more customers to default on loans and also more losses on your side.
Melissa, yes. With the inflation rate where it is, interest rates where they are, clients had difficulty meeting the obligations as they fell due. Consequence of that was that we had to put aside more money to protect ourselves against such losses. And we've never had as high a stock of balance sheet provisions as we've had this half year. The credit loss ratio in our group is 97 basis points. It's lower than our competitors, but it's still very high. It's at the upper end of our target range of between 70 and 100 basis points. At 97 basis points. And as you say, it bespeaks customers that are finding it pretty tough out there.
So we also saw in the latest debt index from Debt Busters that more and more South Africans are relying on personal loans to supplement their income. Are you seeing this as well? And how worrying is it that people are resorting to personal loans to make ends meet?
Melissa, I would answer you by saying there are really three segments or levels of customers in South Africa. One are customers that are reliant very much on social grants. And it's actually remarkable how resilient they are because of South Africa's very strong social security net. At the top end, you've got customers who are relying very much on their salaries as well as investments in the nature of equities, bonds, and their pensions. They are the wealthy, their balance sheets are very, very robust, and they're doing reasonably well. The middle strata of South Africa are really struggling. Increased interest rates, increased inflation, load shedding, job losses, all of those are putting people under strain. I have to say, however, that our bank has been very, very disciplined over the years. We've stood by our clients. We mentioned that we've assisted over 20,000 clients who find themselves in challenged positions, but are still able to pay, but are not paying as much as they ought to be paying. In other words, short paying on their installments. And so, yes, people are resorting to getting help from friends, and then also taking advantage of short-term unsecured loans.
Yeah. Well, some positive expectations also coming out from consumers in your results. Standard Bank is expecting inflation to slow to the Reserve Bank's midpoint in their target range, making the case to keep interest rates flat at 8.25% for the rest of the year. And your growth outlook for the South African economy, my apologies, is also quite optimistic at 0.8%. Why is that?
So, Melissa, two things. Firstly, you are right. We're expecting inflation to dip towards 5.5% to 5%. Consequence is that in the next year, sometime next year, we will see a decline in interest rates. Probably a roughly 1.25% decline in interest rates, which will be fantastic for consumers. Consumer confidence is at its lowest, as you know, as is business confidence. Business confidence is driven, of course, by three things. The one is demand, the second one is interest rates, and the third one is the political environment. And so both business confidence and consumer confidence is in a tough place. The projection by Standard Bank of GDP for 2023 is 0.8%, whereas others are saying it's going to be roughly 0.3%, 0.4%. What gives us confidence? Firstly, the pace at which the electricity situation is being resolved off the back of these reforms that have been put in place, the reduction in the red tape associated with distributed power, Secondly, acceleration of other structural reforms in the transport sector. And then, of course, the other structural reforms necessary to give rise to faster growth in the country, like in the network industries, the telcos, tourism, the water sector. And therefore, we think that the economy will grow faster than most people have assumed.
So just a short one. What products are you offering to customers to deal with power cuts, and how are they funding projects? Are most people taking out extra loans, or are they taking maybe some extra money from their existing home loans?
The one solution is where people are purchasing homes that are already fit for purpose, with batteries, with solar, and so forth. The other one is where people are taking out loans to purchase panels, batteries, and so forth. We have lent out roughly 450 million rand for these solutions, and they're accelerating for individuals, for their homes. Small to medium enterprises are increasingly buying these solutions as well. It's remarkable how quickly South Africa has adapted. It speaks to the resilience of our country and the innovation in our country.
Thank you so much for your time. That was Tshabalala, CEO of Standard Bank.